help me welcome Brian Wittal.
Thank you, Ken. Good morning, everybody. First off, my apologies. I've been fighting a cold for about 3 weeks, so you're getting my radio announcer voice today. It's still not quite cleared up. Hopefully I can make it through. What I want to do today is figure out this thing first. Okay, there we go. It's not going to be so much a market outlook on pricing and everything else. We may get to that a little bit at the end. But sort of want to address this, and what I want to do is bring some insight, throw out some thoughts and ideas that I have over my last 30 years in the grain buying industry, where things are coming from, where potentially they're going to, and at the end, hopefully, if I do it right, I'm leaving you with more questions than answers. And it's basically, like Ken mentioned, is questions, I think, for you that as producers, you're going to have to take home and try to see how these things fit into your farming plan going forward, and what wheat's going to mean for you in the future. So this is just a lot of food for thought, I guess, is what I'm hoping to present to you today. And so why wheat? Well, these are some of the things, like you said, that we've heard over the years. You know, it's what we've done for the past 100 years is grow wheat. You know, we grow the best quality worldwide. Well, that's, you know, that's nice to know. And we have the acres and the world needs it. Again, I mean, you know, yes, maybe we do, and yes, maybe the world needs it, but at the end of the day, is it something that, you know, we can continue to grow profitably on our farms? And so that's sort of what I want to sort of follow on today a little bit, and just give you some, like I said, some thoughts and ideas that I have on that. So what I want to do is look at sort of what's changed over the last 100 years in some of these key points, and primarily focusing towards wheat. So world markets, we'll look at that a little bit, industry, railroads, changes in government legislation, of course, with marketing, the board, and transportation, and some of those things. What has happened to impact you as a producer directly? What's potentially going to be happening in the future that's going to impact you as producers directly? And how does that, at the end of the day, how does that pencil out to you and your profitability growing wheat on your farm? And whether that's going to change your mind as to whether you should or shouldn't, or change varieties, or look at for different markets, all of these things. And then a little bit on grain marketing at the end. So of course, the world markets, you know, primary markets out there right now is you have China, India, former Soviet Union, South America, where we've seen some major changes over the last maybe even only decade in regards to populations, the economic growth within those regions, the prosperity that they've seen in some of those regions, which means the demand for different types of foodstuffs is increasing, and their ability to pay for it. All these kinds of things are all starting to shape and going to shape our wheat markets for the future. And so these are some of the things that we'll look at. We'll get into demand a little bit and supply. Are we growing what the market wants? Can we make a profit competing in the future? There's a question that I'm going to leave for you with some of this information for you to decide whether on your farm you can make a profit, or if there's other things that you should be looking at. And or what do we need to change to become more competitive? I got a few thoughts and ideas. I'd like to throw out some of those. We certainly have some other industry experts here that this is going to lead well into their discussions and topics, and they're going to have some information and food for thought for you, no doubt, that's going to help you to maybe answer some of these questions going forward. And I'll touch on a few of those things just briefly, but like I said, that's certainly not my expertise. So I was on the internet and exploring and looking for a bunch of different current facts and figures and numbers to bring to you, just to give you an idea of what the current position and what the current world market is right now in regards to wheat. So global consumption right now annually on average is about 637 million metric tons. It ranges and changes from 630 to 650 depending on the years, depending on price, all of these different kinds of things. But that, I would say, is probably based on a 5-year average from the charts that I was utilizing is what you're looking at. But like it says there, most of the wheat that is produced is consumed in the country of origin. China, for example, and places like that. You know, one of the top producers, and we'll show you those numbers in a minute. But they consume all of that and then some. Canada is one of those countries that we're in a unique position where it's probably exact opposite. We probably only consume 20% of what we produce and probably export about 80% of it. So what and where the world markets are going is going to be key to your profitability in the future if our markets are going to continue to be export. Some of the things to look at and to consider is, in the high growth countries where poverty is extremely high. And I'll show you some world population stats and a map and things like this showing us, so of course the African continent is where the biggest mass growth of population for the future is predicted to be. There, Southeast Asia and the India region, and of course China. But like I said, when prices are as high as they are right now, and those countries can't afford to buy at these levels, what do? How does that impact our production worldwide? Does that start building inventories and stocks? And if that does, well, we know what's going to happen to price. It'll eventually fall enough that maybe some of those nations can start buying into that, into those markets. But as the population grows, there's going to be continued demand here. And that's what we got to sort of keep in the back of our mind. China and India over the last few years, the social and economic affluence is building, as we have seen, and they are becoming real economic superpowers. And we've certainly seen that has changed their demand for products, not only food products, but every other product in the world. And when you're talking with the population mass that they have, that's significant. Former Soviet Union countries, here's another one that is just emerging, and it's something that we have to look at both from I guess the opportunity as far as from a market perspective, but also from a competitor's perspective. Because you look at some of the countries over there, former Russia, Kazakhstan, Ukraine regions, they've been having trouble and struggles the last couple of years with droughts and different things, but since the old Soviet Union has basically broke up into independent countries now, they are trying to revitalize their economies. And they're sort of back to where Canada was maybe 70, 80 years ago, where agriculture is going to be the mainstay or is going to be the starter of that economic growth and diversity. Because they can grow wheat, they can grow barley, they can grow crops there to excess. And so what do they want to do with that excess? They want to get it into the world markets. They want to get it out there. They want to get world currency back into their economies. They want to get trade going between themselves and other countries. That's what's going to build their economy. So they are going to become direct competitors. And so I'll show you some numbers that shows how they've slowly been building their production over the last number of years, and what the potential is and what some of their hurdles are going forward before they probably get to what I would consider to call their maximum capacity of production and things. So again, all of these things are going to factor into the future of wheat and the profitability of wheat here back in the Western prairies for producers here. And the other thing there, of course, that we are seeing more so right now that I think is really going to push things is private investment. In some countries, there's issues, and I talk about it here, and I guess we'll, in a little bit, is in South America, for example, the government there is a little reluctant to let private companies and private industry into the ag sector to build the terminals, to build the handling facilities and everything else. They don't want to sort of let go of the control of that industry quite yet. In Russia and parts of that region there are substantial monies, whether it be private companies or we're even seeing, government entities that are going in there from other countries and investing monies either in buying lands, renting blocks of land, or investing in handling or production facilities or whatever, with of course, the end result being that whatever those facilities are producing is going back to the home countries, like to China, for example, because they are trying to control what they need for food sources for the future and not having to be at the mercy of these volatile markets to have to buy product in at these high prices. So they're trying to, again, control their environments better. So we're seeing all these dynamics that are starting to work. And in the former Soviet Union states, what that's going to mean is you put private money in there, things happen a lot faster than if you have government involved. So you're going to see these facilities get built a lot quicker. You're going to see the push for transportation corridors, railroads and roads and these kinds of things to get fixed sooner. The way for that to happen is it's going to be government money that's going to have to go into those. And if these companies can start investing and start creating economic growth in that region, plus pay taxes to the governments, they're certainly going to use their influence to say to the governments, okay, we're paying you substantial taxes now because we built these mega-million-dollar facilities. You start improving these roads and railroads so we can get the grain to us, so we can become more profitable, more efficient, and help your economy grow. So this is going to exponentially start to accelerate over the next few years, way more so than it has over the last 20 or 25 years, is my opinion on that. In South America, as mentioned, ag production potential there is still unknown, primarily more from what's the policy of the government's going to be there in regards to how much more are they going to allow the rainforest to be cut down just to clear cut it to start growing other crops and things like this. I mean, there's a land mass there that grows. It depends what they're going to allow them to grow on it, and whether they restrict the amount of rainforest that can be cleared, these kinds of things. I mean, there's massive potential there. Like I said, major infrastructure issues. You read reports that for some producers to haul grain to the port, it's a 30-day round trip, and they're taking something that's probably similar to a 3-ton truck. Pack the family in the front and away they go. And they're trying, try not to slide down a mountainside or off of a wet road or something like this to get it to port. The efficiencies are not there yet. The problem is when the efficiencies do get there, through improved infrastructure and everything else, it's going to reduce their costs immensely and make them way more competitive in the world markets. So can you adjust your production costs and your costs to compete in the world market to meet this in the future? Is one of those questions, I guess, that we have to look at industry-wide. And the other one, like I said, will government or private industry step in to rectify these problems? If it's government, it's going to take a lot longer to build facilities and everything else. If it's going to be private industry or a combination of, you will see that happen and accelerate a little quicker. So let's look at wheat importers. So where is the demand in the world? So this shows here quickly that, it's got the pointer? Yeah, it does. Okay. North Africa and the Middle East, this is when, so you know, since 1960-61, demand growth, of course, steadily grown, no doubt, due to, you know, correlates to population growth in those regions. Southeast and Southeast Asia regions is there. Then you've got South America. The red is the Sub-Sahara. There's a few others in here, and then you got former Soviet Union and European Union. So that's where, within these 6 or 7 regions, that's where the majority of the 140 million ton a year of wheat is imported to. They're the primary buyers of the extra wheat that we have around the world into those regions. But like I said, there's things that are changing there. Here's just some stats I found. I was looking through and I found it interesting. I thought, well, let's just put it up here. I don't know if people really understand, but if you start down here, 4 births every second, every day. That's our rate of growth right now. We lose just about half of that every day. But as you correlate it up, you know, every minute, every hour, there's what we have per year, 131.4 million births, about 55 that die. Here's a stat that I want you to remember, so when I go to the next chart. So right now, on average across the world, there's 19 births per 1,000 of population. And every country, of course, is different. That's the average. So we have some highers and lowers. And so I got some figures that I'll show you here where the high spots are and where the low spots are in the world, and how is that going to translate into that last chart that I just showed you about the importers, who are the major importers right now, and what that's going to mean. Here's your world populations. 4.2 billion in Asia, 1 billion in Africa, Europe, just, you know, 3/4 billion, North America, 500 million. Total population right now, we've clicked over 7 billion people, is what the counter is showing right now. The one chart this one place I went to, website, it's a live tally, and that thing just keeps rolling as the numbers go up on each one of those stats that I was showing you. Some of them are just humming. The ones, you know, bursts per second and stuff like this, the numbers, it's an approximate live counter calculation. But here's the one. In less than 40 years, that's where they say we're going to be, 9.6 billion, another third as much as what we got right now. Those are all mouths to feed. Now, where's it going to happen? Here's the chart that shows births per 1,000. Starts down here at 8, with the the blue area. There's probably one of the lower rate in over there, and I think that's in Great Britain region and in that region. But Canada over here, we're about, the chart said we're about 9 or 10 births per 1,000. And remember, the world average is 18. Take it up this slide. These regions here, over here, African subcontinent, that's 35 to 50 births per 1,000. That's where the growth's going to be. Over here, here's China region. Here's India. So India's in that 25 to 30 range. China's a little less, down in the 10, 15. But that's where the significant growth is going to be. That goes back to the point I was making about the former Soviet Union states. They are positioned right here. As they grow their production, they are, and get their logistics issues sorted out, they're in prime position to sell and move grain into these key world markets right now. And where are we? Over here. The only way to be competitive, cost-wise, is we got to be able to produce it cheaper, or we have to be able to sell it cheaper than them. Those are two distinctly different things. We may have to sell it cheaper, but are you making any money at those prices is going to be the thing in the future that we got to consider. So let's talk about the world wheat supply and where it's at right now. So you remember there's approximately 637 million metric tons that are consumed in an annual year. On average, about 655 million metric ton are grown. So that's not giving us a whole lot. We're talking about less than 20 million metric ton every year of excess. So how can we trade 140 million tons? Well, again, this is an average. We've been up over 700 million ton. We've been down to 630 million ton from year to year. But there's always been, over time, there's still surplus out there. There's always still grain. The other unknown is some governments that are holding inventories that we don't know what they are. There's getting to be fewer and fewer of those that are holding inventories, one, because of the cost of it. So that's going to be something that down the road is going to start to shake out. And maybe as we realize that there's maybe not as many stocks out there as we may think there are, that's going to start definitely have some price persuasion. So again here, like I said, in the EU, the top producer with about 133 million metric tons, which is about 20% of global production. Say China with 108, so there's the percentages. So these top 10 are producing approximately, quick math, I think it's around 80% of the world production. So from there, who are the major exporters out of those? US would be the top exporter, so that have excess to move into the markets, about 20%. There we are, right in second place. So we are a major exporting nation, which is important in the overall picture. But in the world, as a buyer, I really don't care what your cost of production are. I'm going to buy at market, whatever the market is that year if I have to. But how it relates back to the cost of production from that country or whatever, it does not come into my thinking process one iota as to why don't I pay an extra $5 a ton more so that the farmer gets a little bit more out of that? Because the true harsh reality of that is it'll never get back to him. So why would I pay any more for it? So this again just shows graphically the different countries, and over the years I guess maybe that's where some of the interest lies more, is what have we seen happening? US from back, and this is early 1991, 92. Their percentage was a little bit bigger at one time, and then it's disappeared, and that was probably more so as other crops, corn and beans, became more prominent there. So they maybe lost some acres to wheat over the years as the price of wheat back in the early 90s and stuff wasn't as good and as profitable. You got Australia here. What we've seen is they've fluctuated. They've had at times some good opportunities. The last few years, of course, not. We know the primary reason for that with the droughts that have been happening there over the last number of years. Canada, we've been, when you look at it, fairly consistent. Early on in some of the earlier years there, we had some higher trade percentages, but it's been fairly consistent. This one here, it's showing a trend. That trend's going to continue. And as I mentioned earlier, where are they located in comparison to where the major markets and the growth are going to be? That's the one that we need to be concerned about and need to watch as far as a major competitor. Can they outproduce us? Can they manage it smarter? Can their cost of production be less than ours? Those are going to be the things that are really going to be critical in the future to you as if you want to continue to be wheat producers and how profitable you're going to be. Here's one. This is a chart of world wheat production. This is from 96 back to 2000, 96 back here going forward. Just showing what their averages were. And you can see there's always fluctuations, of course, when you're growing anything. But one of the things that's consistent, I guess, when you look at here is, let's say Turkey, for example. From 16 to 21. A 30% increase, and it's been a fairly consistent growth. Ukraine from 13 to 22, it's about a 70% increase, fairly consistent growth. Kazakhstan from 8 ton to 22, that's just about a triple, 300% increase in production. And they have not achieved their, what I would consider to be their maximum production capabilities in those countries by any means. Right now, and if taking into consideration new varietal, advantages and stuff like this, going ahead and things. Prediction is right now that they figure the farmers, some even states are probably about 50% of what people consider they could be at for maximum production in the next 20 years. So that's going to certainly help offset this boom in population that we're going to see, but it's also going to mean that it's direct competition for you. So how that's going to pencil out in the end, I don't know. How much is industry going to put into this to get things going there, to be able to access those markets? What you're seeing too is, like I said, with these large tracts of land that are being purchased in some of these regions and going to the multi-corporate farms and everything else is what are they bringing in for technology? What are they bringing in for production management? They're not just going in with the old, Massey tractors and 12-foot cultivators and, and using 1960s production technology and methodology. They're going in and they're ramping up hard. And we're going to see them get to those levels of maximum production sooner than later. So these are all things, again, that you need to keep in mind going forward and thinking about where it is that we want to go with our markets. Questions you need to ask, are we growing what the markets want? Where's the best value? Is it in quality? Or is it in quantity? Under the previous marketing regime, if you want to call it, under the wheat board, some people believe that skewed that a little bit because it was promoting producers to grow more of the high quality stuff because we were known for selling high quality. But from the board's perspective, that's what they wanted to do, and they want you to do is grow as much of that as possible because it makes it easier for them on any given year to market that product. They could blend it, they could undersell it, they could do whatever. If they have lots of one red, it was easier to sell that and discount that than if it's all three red and you're trying to convince somebody that it's better than it actually is. So I mean, the marketing regime, if you want to call it, or that we had, maybe didn't get producers to look at that so much. What's best in our market? What's our closest markets? Let's look at where we're at and what's going to make us the most profitable. Are our costs of production too high? Let's step back 70 years. If you want to call it subsistence farming, I guess, it wasn't a lifestyle. You made enough to put on your table and eat, a little bit extra to sell and get you in through the next year, and farming was farming. You didn't have the same disposable income levels as you do today. The farm that I grew up in Saskatchewan, I know there's a definite difference between myself as a farm boy and my buddies who lived in town whose dad was the banker, or from a disposable income perspective, from the bike that I didn't have to the bike that he rode, from all of these things. And that was because we could not afford that on the farm. Nowadays, that has changed over the years. But it has elevated our cost of production. Now, I don't want to say to an unrealistic level, but to a level that we are comfortable with. But can we take that now and apply it and compete against the former Soviet Union states in the future? Or against South America, or against these different countries in the world? Because that's a key component of net profitability at the end of the day. So again, that's something that you have to look at on your farm and make those decisions. Tariffs or subsidies, there's the other one. I mean, we've been able to get away from some of the subsidy wars and the tariffs and the payments that have been made over the years, whether it was in the EU or was it in the US. As market prices go higher, then the governments aren't having to worry about subsidizing producers because they've been producing or selling grain at below cost of production. But what's to say as some of these countries, like I say, former Soviet Union states, as they try to grow their agriculture economy, if the governments there don't try to do some types of incentive programs to get the production accelerated. And that's going to be, again, a direct competitive disadvantage to us here. Or tariffs. How is the US going to re-script their ag programs? What are they going to do to change it, if anything? You know, the payments that they're making and everything else. And how does that dilute, you know, what we're able to get for our grains here? I mean, all of these things are factors. I mean, that's an unknown. We don't know what, but that comes in. You have to be prepared to adjust to that, or you have to be able to prepare to take less for your product to compete in that market against that subsidized product, is at the end of the day is what it comes down to. Cost to get product to market. Now there's one that, you know, again, that we have to look at. Where is our market? Should we be pushing everything export that has to go rail to the coast or go east at extreme expense compared to Kazakhstan or Ukraine that can just rail it straight down to the Black Sea region and then over into North Africa or down to India for probably a half or a third the cost of what our freight bill is. Because if that's your buyer over there, every dollar of freight, if you look at your checks, comes off the bottom line of your check. It doesn't come off the bottom line of the grain company. That's a cost within the system that goes directly back to you. So what do we need to change to be competitive? Well, some of the things, genetics and industry regulations for varietal identification. In our old system of KVD and grading, that did not allow certain varieties to come into Canada, or into Western Canada, that may have been very good varieties agronomically for you to grow, because we could not distinguish them. Might be a winter wheat variety from down in the States that would be great to grow up here, production-wise and everything else. But because visually it was hard to tell it between that and a red spring variety, it was not allowed to be registered, or as a feed only. But usually even then it was not allowed because it would get into the system, could confuse things. Things have to change there. I seen actually a memo this morning. I was just doing some ag news cruising. And Minister Ritz has sent out a letter to the members of the committees for varietal registrations in Canada, asking them to review their policies and procedures and try to find a way to eliminate some of the red tape and the time that it takes to get varieties registered in Canada. Because prior to him sitting down with them and other industry partners to look at some regulatory act changes, he wants to have some concrete decisions made by them on how they can try to reduce some of these delays in varietal registrations. So the government's trying to move forward on some of this, but what I think it needs too is a strong voice from industry to say what and where it is that we want to go and how we want to move forward and what type of changes we believe we need to see that are going to directly benefit producers. And if that means adjusting other things within our industry as far as the grading system and everything else, then so be it. Let's start looking at that. Because we got to compete in this world market head on. And we have to do it in a realistic fashion. Another thing that we need to look at is increased market utilization in North and Central America. In the U.S., it's our biggest market. Are we growing what they want down there? Or are we overproducing quality that we really don't need to be? Or are we getting value for it down there? True value for it compared to what their dark northern spring is worth as compared to our red spring. About the Mexican market. I mean, it's a growing market and beyond, going down through Mexico into Central America regions and stuff like this. It's all area that we need to look at. Here's a map, and I thought it was interesting. It just shows average wheat yields from 97 to 2000 on a per ton basis in the different growing regions. The red is under 2 ton per acre. Yellow is 2 ton to 2.5. Green, 2.5 to 3, and then of course over 3. Well, look where those regions are there and over in eastern Canada. But are we growing some of the right varieties in the right areas? If we get the right genetics, where should we be growing them if they're high production? Well, I would say that we should probably be growing them up in this part of the region, up over in the Edmonton area and stuff like this, where you're going to maximize your production. Or the Peace region, or the corridor right here, the Central South Corridor. And things like this. Are we seeing varieties being bred for specific regions, for specific purposes and things like this, taking advantage of some of this methodology? Irrigation. If you have the opportunity for irrigation, are we bringing in varieties that are going to help us there to be more competitive, more production at less cost, all these things. So let's touch on industry a little bit and some of the changes that have happened there and some food for thought for you there. We've gone from many to few companies and locations over the last 100 years. From when we had 6, 7, 8, 9, 10 elevators in a municipality or in a community. We're down to about 7 major players out there. And of course, the biggest transition we've seen over the last 6, 7 years was the pools merging. And then from there, going with UGG, and then from there to Viterra, now Glencore. It's fairly significant when you take the 4 major, I guess, grain companies and amalgamate them into one. But there are a number of other players out there that are now coming into the market, and we've seen over the last number of years. Of course, Louis Dreyfus, is new in this market over the last 10, 15 years. Another major world marketing company and things, which is always good to see. We've gone from co-ops to private enterprise. So what's that meant? Well, it's maybe meant a little bit of efficiency. It certainly meant a rationalization in the system, because the co-op mentality at that time was to try to have a delivery point every 7 or 10 miles to be able to provide as equitable an access to every member as possible. But from a strictly corporate perspective, bottom line, that does not make sense. That's just big costs. So as things transitioned, no doubt we started seeing things, elevators closing and everything else. So what did that mean? Well, one thing, and maybe you can remember back, I mean, if you delivered all your grain to one of the co-ops or else, there was dividends. So you've lost those dividends. You got them converted over into shares at some time, but then those got diluted or changed, or the price went down and back and forth. And some guys, when they dropped too far, most guys ended up getting rid of them before they were worth absolutely nothing, and et cetera. So there was a direct impact right there. It may not be a major one that's going to break your farm, but again, it's all on a profit per acre, per ton, per bushel in your pocket. It had an impact on you that you had to adjust your farming operation, and you basically took the hit on that, because you have not recovered that anywhere else. Same with equipment upgrades. You've had to go longer hauls now, so your 3-ton and your tandems just didn't make sense. So you're going to tridems, or you're going to transaxles, or you're going to Super Bs, or whatever. All again, costs to you that you have to pay for directly as you're growing your operation, and maybe it fits in. But if you only had 10 miles to go instead of 100 miles to go now on average, you wouldn't have gone that direction. You wouldn't have made that probably that initial capital expense. So there again is another direct impact that now you have to try to gain that back out of your farming operations, out of your profitability. And another one is the stress on the roadways. There's more trucks on the roads going farther now, and that becomes a direct tax dollar, which you, as everybody else, pays. So again, there's somewhere you're paying out of your pocket for some of these things that have happened. And everything, I guess, I'll keep going back to it. Every one of these things keeps taking money out of your pocket, which is taking money, your profit, away from you. And if these things continue to happen or escalate or build, is growing wheat going to be profitable in the future? Is, I guess, the question that I'm trying to make sure that you got in the back of your mind and you're thinking about. Railroads. Closing of many grain-only dependent rail lines across the prairies over the past 20 years since the revision and redraft of the Western Grain Transportation Act back in '95. That's when it aggressively started, because they put in a couple of clauses in there that at that time forward allowed the railroads to decide on which rail lines to keep open or not. They had to do study and they had to prove that it wasn't profitable and these types of things prior to being able to close them. But they now had the right and the ability to do that, where prior to '95 they did not. So we've seen a harsh rationalization within the system. So the railroad may have started it to some degree, but between the railroad and the grain companies, you know, in some places they weren't arguing real hard if it meant that they were going to have to close down elevators in some places. So that meant a loss of delivery points and producer cars. You still have the right in legislation to a producer car as a producer, and that may never get taken away from you. But the practicality of loading one, again, I mean, if there's not a producer car loading site within 200 miles of you, how does that make sense? It's pretty much irrelevant. So you've lost that ability to access markets and not have to pay the elevation charges to the industry to do it, which again goes back to your profitability. If you can put that 20 bucks a ton or more into your pocket, at the end of the day loading producer cars, that would be, you know, that was a viable option for producers for many, many years. But right now it's dying a slow death. Or the only place where you have producer car loading is at sites now, because of restrictions that have been put in about the minimum amount of cars that you must be able to take to load, 25 or 30 or 40 or whatever in some of these places. And of course, just like the big elevator terminals now, the railroads are saying that we'll give you 24 hours to load those cars, because then our train's coming back and we want to pull them then, otherwise you pay a penalty. So they're basically doing anything and everything they can to make it as unprofitable as possible for producer cars to continue to exist in the system. But you still have the right in legislation, so be comforted by that. So government legislation, let's talk about this. This is one this is my thought on how I see things could potentially merge. It is a whole new world out there. Grain companies now manage their own sales and logistics for more efficiencies and profitability. Let's remember, they are called grain handling companies. There's a secret in there. They make their money handling and moving grain. They don't really make it on buying and selling. They can hedge themselves, protect themselves on the markets. That's not where they make it. They may gamble a little bit, and they make 5, 10, maybe 15 bucks on a sale if they feel the market's going to go in their favor and they don't hedge right away or something like that. But the majority of the time, they don't even bother taking that risk. They use the markets to protect themselves. They make their money on moving the grain. Elevation and handling fees are the name of the game for them. Focus is now on return to shareholders. We're no longer co-ops. It's not return to members. It's return to shareholders. You want to get in on the profit game, buy shares in these grain companies, or you should have bought shares in them a while ago. Because the ag industry is going to do fine. The ag industry has done fine for years. The profitability, if you look at some of the top companies at their bottom lines, and the railroads that are involved in, of course, the industry and everything else, their profits and bottom lines seem to be steadily growing. So when people say, oh, the ag industry is great, and this is a great opportunity for the ag industry, just remember, yeah, you're a part of the ag industry, but where are you in the ag industry? You're down here as the primary producer. You're key in the ag industry, but you certainly don't get to seem like share in that whole opportunity that's there. Not near as much as the people in the middle do. So what do I think is going to happen in the future? Because the Western Canadian wheat export markets are shifting from a seller's to a buyer's market, We used to have the wheat board. All the different grain companies could make sales offshores, but they had to do it based on a price that the wheat board gave them, saying that this is the market, this is where we're selling and trading right now for one red spring. Here's a $20 or $30 variation. If you want to make a sale to Russia or whatever, go ahead, but it has to be in this range. And then you have to confirm with us before it's final and everything else, because they control sales and marketing. Now that the board is not there, the grain companies are out independently trying to sell to a buyer. So as a buyer now, I'm sitting back and thinking, well, before the wheat board had control, they knew what the market was, and I was only going to be able to dicker with either Cargill or Viterra or the wheat board 10, 15 bucks maybe on this sale that I want to buy from Canada. Now I've got 5 buyers out there who have a different motive and incentive for profitability. They want to move grain. So I'm going to go to all 5 of those, and I'm going to start dickering with them to see who wants to move the grain the most and what kind of price are they going to offer me. And if you make money moving a product, it makes sense. The more product you move, the more money you make. It's turnover. So in that kind of a world, what you're going to do is see if price of your product is the hindrance to you moving more, what do? You reduce your price a little bit and try to make it up on your volume. Like I say, they don't make the big money on the price of the product that they're selling, they make it on the turn. So grain companies are going to willingly look at dropping their price 5 or 10 bucks a ton to be the one to get into that market. If Cargill thinks that Viterra is selling at $600, well, let's go 5 under and see if we can't snatch that $100,000 or 100,000 ton sale. They'll do that at a blink and not be concerned with what that $5 impact means to you. Because now they've got that sale, they've got that volume, they're moving the grain, they're making money. So potentially what you're going to see is, I mean, they're not looking after the best interest of trying to get the best dollar for that product. They're moving that product. So you got to be very, very aware of that situation and not rely on just taking the price that the grain company offers you at the elevator that day. Because it's going to be based off of whatever price they ended up selling at. They'll just take off a little bit for profit, a little bit for their handling fees and these kinds of things in that basis, pencil it out to net price, and that's what they'll offer out to you. And they might be willing to give you a bit of a premium here or there for doing it, but be rest assured that they aren't losing any money on that. So who's taking the shot if they drop that price 5 bucks to undercut the competitor to get that sale, to move that grain, because that's their key motive, is moving it. So what else has the Grain Marketing Freedom Act done? It's opened up Western Canada to new opportunities in grain and agribusiness sector. I commented on that, and there's opportunity there for new investment, for agribusiness to come in and to be profitable. Will that translate or relate down to you as a producer? I don't know. It depends on what it is they're looking for product, and it depends if you're growing that product for them, and it depends if it's in a niche market scenario where they're willing to pay a premium for it, where it makes your bottom line look better. All these things are going to evolve and are going to emerge over the next little while. But here's one that I just picked up last week, an announcement. They plan to bankroll and operate a new grain handling facility at Northgate, Saskatchewan, down by Estevan, for quick access to US and Mexican processors. Look at this. Capacity to handle up to 40 million bushels of grain. So that's 1 million ton. Currently, some of these big facilities that are around, I know when I was with AgPro at Crossfield, Trochu, Wilson Siding, Vulcan, those facilities are handling from 250,000 to maybe 500,000 ton a year. That's some of the bigger ones. So this is fairly significant investment that this company is making, because they believe that there's access to other markets down into the US now, because there's not that restriction of the wheat board being in control of those sales going down across the line. They see opportunity here. That means better market access, which will hopefully maybe mean, if we can be moving our product into more places, that's better than just one export market or something. Plus, this is focusing, as I mentioned earlier, on that North American market. Your freight costs should be cheaper if it's just going down into the US than trying to rail freight it all the way out to Vancouver and then over to China. So this should provide some opportunities as growers for you to reduce some of your costs and improve your profitability. That's the end game. So the plan is for this facility to handle high-quality wheat, direct line access to U.S. and Mexican millers, and will open extensive new markets for Canadian canola as well. Now here's the interesting one, the next slide here. Toronto-based Cirrus Global is the one that's going to build this on 1,500 acres. It's not just a grain handling facility. And the reason for this is because they're bringing the rail line up from the northern states and interconnecting, as it says here, they're going to do a double loop, 2 independent rail loops, one for the grain handling facility, one for an oil handling facility. So now you can see why they strategically located it down in the Estevan region. And also, because Cirrus is also active in the grain handling, back in 2009, I believe it was, they bought the former Robin Hood flour mill down east. So they're going to be sourcing grain from Western Canada and moving it direct to this facility as well to be competitive in that eastern market. So if we look at this map, Estevan is right there, right in this bottom corner here. Look at the access to this market. Look at the access to the lakehead here to filter it to wherever they want to. Look at that distance compared to this distance. Should there not be some cost savings there for you as producers? Now, it's certainly going to be more advantageous to the producers that are growing in this region. No doubt that's where they're going to draw the majority of their grains from. But again, if it makes economic sense and it's a better market price here because of reduced cost as opposed to you going over here, you might be doing some recreational trucking to get it over there. But, you know, again, it's bottom line. But this is providing another opportunity, opening up new markets that could certainly make wheat profitable for the future. And that's, I think, is a key going forward that we're going to have to certainly keep a watch on, is these kinds of things. But there's certainly more opportunity there for Cirrus to make some, you know, serious money. And I'm sure it's going to be a little bit more per ton that they're going to make than you will probably make because of this. So transportation, Crow benefit. Well, a number of years back, we lost the old, as they said, written in stone guarantee for low-cost rail handling fees when they rewrote the Western Grain Transportation Act back in '95. The government was subsidizing it, but it was getting to the point where the subsidy was, it was getting to be fairly onerous on the government. It was big dollars. And so they decided they had to look at some way of stopping that or changing it. So what did they come up with? Well, we got that one-time cash payment. Do you remember how much that was? Do you think that offset your transportation loss for 1 year or for 40 years? It was probably lucky if it offset your transportation for 1 or 2 years, total tons that you were going to be shipping. Then just last year, there was a comment made by the Minister of Transportation in regards to service complaints around the railroads. And he basically said, if you want better service, maybe you need to consider paying them more money to get better service. Right now, the grain companies, what do? They move grain. They want to move more grain. So they want to see better service. So they're going to talk to the railroads who are providing better service. Say, hey guys, will you provide us better service? And they'll say, sure, as long as you pay me commercial rates. Because if I have to stop hauling containers to haul your grain, I want to be either making the same money or more in order to do that. So you got to be competitive. So they say, well, okay, that's fair enough. We just want to move more grain so we can make more sales and everything else. So guess what? Those two groups go to Ottawa. And if you've ever been to Ottawa, the largest lobby group that there is the railroads, as far as the number of full-time lobbyists they have sitting there in Ottawa. So you don't stand a chance as farmer organizations, unfortunately, in trying to lobby against something like this. So they're going to go to the government and say, hey, let's remove this revenue cap. We're now in a full open market environment here in Western Canada. Why are you impeding us by putting this cap on here? Let the market dictate what our freight rates should be. And the government will eventually be influenced to say, yeah, okay, let's do that. So, okay, now all of a sudden the railroads are going to start hauling more grain. The grain companies are going to get more efficient, move more grain, maybe make more sales, which would be beneficial for us here as well. But that increased cost, which is going to be 15 to 20% if you look at where our costs are right now compared to what other things are that they move, what happens to that? It goes direct through the grain company or to the bottom line on your check. It doesn't stop until it's deducted off of your check. Plain and simple. So that's potential concern for the future as far as if we're going to continue to export our wheat as opposed to looking for other markets. Grain marketing. Over the years, what have we seen? We've got active futures and options markets out there now that you can utilize. So you don't have to rely on taking that price from the grain company that they offer every day. Now you can start looking at things and pick and choose your futures when you want, pick and choose your basis when they have needs or when they tighten it up and different things like this or get in a squeeze, whatever. You can make those decisions now instead of allowing them to make the decision as to what you're going to get for your grain. Have to be doing more of that. There's numerous variations of contracts available out there, from production contracts with active God, like I said, to basis only, futures only, options contracts, combinations of that provide you the ability to control your pricing yourself. And if you do it far enough in advance, then you're not stuck having to take a price that they are offering you. There's new types of production and risk insurance out there. I mean, you can go on the markets and you can actually buy weather options to protect yourself against bad weather. You can buy contracts against bad weather, insurance contracts. You can get full production insurance from different companies now, based on previous years, based on your net income of your farm, things like this. So there's different ways out there that you can protect yourself in these markets as well that you have to look at now, because it's becoming a high dollar turnover. And when you look at the amount of inputs that you spend and the value of the dollar of the products that you grow, what you buy for machinery, all these things, I mean, you're talking mega millions of dollars that you're working with. You got to be protecting yourself, keep yourself alive from year to year. And the onus is on you to do it because nobody else is concerned about what your costs of production are in the system. They have their focus within this whole marketing system, but it's up to you. Like I say, don't leave it up to the grain companies to determine your price. So why in the world are we growing wheat? Well, what's the answer to the question? I don't have that. You yourselves are going to have to, I guess, take some of this information along with what you're going to hear from the next two presenters and decide whether this is viable for you in the future or where we need to make some changes. There is demand out there. We've seen that with what we're seeing for growth, and we have supply. And if we can continue to increase our production, that's going to give us more to export or to sell, because our population growth isn't going to be near as exponential as other places, so we aren't going to need to worry about that. We aren't going to need to keep near as much at home. We need to target our markets. Maybe we need to look at this U.S. market or the local markets. What do we need to do locally that reduces costs so we can get it there and make more often? Is there profitability in growing it? Right now there is. Will there be in the future if some of these other things kick in? That's what you're going to have to watch and what you're going to have to try to determine going forward. And we need to make some changes and improvements in the system in the future, like I said, around the access to genetics, the access to varieties that are going to help us be more profitable at the farm level. For you guys, that's the key responsibility there. What is it that I can bring onto my farm that's going to help me improve that? And we need to become better marketers. I believe with marketing, not just because that's my bailiwick that I'm in, but with marketing, there's greater potential to increase your net profitability by close to 20% by becoming a better marketer than the likelihood of doing it on production increases from where you are today with what you can improve, and for the cost and the investment that you'd have to put into it for sure. And that's where I believe where probably the best advances can be made and the best increases in profitability. So I hope I've left you with some food for thought as to looking forward, in particular, like I said, to the wheat markets going forward, and give you a bit of a glimpse of what I think is going to happen and evolve in this whole thing. We may have time for a couple questions. I don't know. I don't want to throw you off as far as time, but I will be here till the end if anybody has questions later on. If not, thank you for your time and attention this afternoon.